All right, so welcome back to QuickBooks. Welcome back from the exam. So now we are going to be starting on a new segment here, which is the other half of the exam, which is going to be starting right here in the middle, which is going to be the bank reconciliation and other bank transactions, okay? So this is going to be dealing with just the banking section itself. Now, there's a few things that, again, you'll be going over, such as what happens when we have to go look up transactions or when we have to perform any bank transactions. The real chunk of this chapter is mostly the bank reconciliation. What is a bank reconciliation? So I'll briefly talk over that. So again, if you're following along with me, you need to be on Bank Rec 21 portable file. Okay. So first, let's talk about the bank reconciliation real quick, and then we'll talk about the other as we go through the book. Okay. So first off, a bank reconciliation. Why is a bank reconciliation so important? It is definitely very important, especially when your bank is going to be your number one place to ensure that your money leaves your checking account and your money gets deposited into your checking account. Especially when we understand that the bank has time. Okay? Just because I deposit money today, that doesn't necessarily mean it's going to clear in my bank account right away. No. Some places do, some places don't, but it also depends on what time of day that you go in to deposit it. Are you using the ATM or are you going inside the bank? During what time, what hours, and what day are you going to do this deposit, right? Because when we actually take a look at deposits, right? Especially if let's say you got your paycheck, right? And you go after work, which is about 5:30. Depending on which branch you go to, I know for a fact that a lot of times, right, it's just like any other business. They have their standard business hours between 8 a.m. to 5 p.m. So that means that bank is closed. But let's say you deposit it in the ATM. What happens is that because you decided to go on Friday at 5:30 or 6 o'clock, bank's already closed. That means they're not going to process your paycheck until the following business day, which is Monday. Okay? Yes, they open on Saturday to do those minor business transactions, but that's the thing. It's a weekend. They do not do any services over the weekend except for, okay, you want to make a deposit? Okay, but it won't clear until Monday. Okay? So that's a huge thing, including holidays. Holidays also affect the length of time it takes to deposit something. So if you deposit something on Friday at 6 o'clock, you're expected that that's not going to clear until Monday, 8 a.m. when the bank starts opening their business once again. So with that being said, that is about a 2 to 3 business days that you are not going to have that money in your checking account. So because we are dealing with another financial and institute or entity that is also another business, we have to assume that our transactions that we do with this bank may not clear until 2 to 3 business days. Usually they'd say 2 to 5 or 1 to 5, whatever it is, right? It really depends on what it is. Now, especially when after you've done that, right? We also have to talk about, what about if I wrote a check? A check has a 6-month holding period on it, since the day that you allow the check to be available. 6 whole months. So if you decide to write a check out to some vendor, right, and they don't deposit the check into their bank account, they have 6 months to deposit it. So that means it will not reflect in my bank statement at all because they never took the money out. So that's why it is our job to do a bank reconciliation, which allows us to match our books to see which checks have cleared and which deposits have gone through, and any other extra transactions such as withdrawals or money funds transfers, things like that. okay? And also business and also bank service fees, okay? Because there's always going to have that. Now, those are things that are going to affect your checking account, but also affect your bank statement as well, because that's what appears on my bank statement, then that's the money that's gone through, and that's what it's happened. Okay, so it is very important that you reconcile your bank at the end of every month, because you're always going to get a statement at the end of the month. Okay, so that's one of the things that you need to know there, is that it is very important that you keep a good track record of where your money is going. All right, and the best way to be able to do that is to use your to do a bank reconciliation. Okay, so that's just the bank reconciliation there. We'll come back to it after this small section on other bank transactions. But I just wanted to make sure that you guys understood the main core concept of chapter 5 is we need to keep a good track record of our bank account by making sure where our money is going. Okay. So let's take a look at more common bank transactions. So let's go ahead and take a look here by looking at transferring funds between accounts. So this is actually pretty easy, especially if you are, in essence, have like things like petty cash, or have like a safe like a savings account that you want to transfer money to, you can do that. Now, of course, you would have to obviously do that through your banking, right? You can't use QuickBooks to do that for you, or can you? Yes, you can, and I'll talk about that in a few minutes. But when you do these bank transfers, right, it does have to go through the banking itself. So you do have to be like, you have to go call the bank account and transfer the money from one account to another. Yes. Now, if you're talking about a like any account in your books, no. You won't be able to, because in this case, what we're doing is we're just transferring between bank accounts. Okay, so again, if you have a savings, money market account, or a restricted funds account, that is something that you want to consider when making these transfer funds. Okay. So how do I do that? Pretty easy, pretty straightforward. Now, you won't be able to do it anywhere other except for one place, and that is up in the banking menu, okay? You don't have it on your homepage or anywhere else. It's going to be located in your banking menu. When you click on that, you're going to have transfer funds. So if I click on that, it's going to ask me, okay, what accounts do I want to transfer from? And what accounts do I want to transfer to? So this is primarily going to be between, again, your bank accounts. So in this case, I want to be able to put some monies into savings, right? So let's say it's January 28. Maybe at the end of the month, if I have extra money, I'll put it aside for savings. So first off, I got to figure out what the date is. So we said it's going to be January 28. Okay. What class does this partake in? It really depends. Are you transferring this money for a particular store location? In most cases, the bank account is shared between the both stores, so it doesn't really matter if you're saving it for San Jose or saving it for Walnut Creek. The general idea is you're saving it in general. All right, so first off, we got to figure out, what are we transferring from? We're going to be transferring from our checking account, okay? And where am I going to be transferring it to? So in this case, I'm going to be transferring it to savings. Now notice this. It says that I can transfer to any amount. Yes, you can, but remember, think about it. If you are trying to put more money into advertising, your best bet to do is actually purchase the advertising, not just designate it into that account. It doesn't work that way. All right. So in this case, it's mainly transferring from your bank accounts. Now, we'll talk about transferring information from one account to another account in chapter 14. But in this case, that's what you want to do. We just want to make a transfer from my checking account to my savings. Now, in what amount? So it gives me my account balances that I currently have. And I'm going to say I want to put $100. Okay? And then what is your memo? So as you can see, it just says, memo says funds transfer. So again, you could say funds transfer to savings. Okay, whatever memo makes it easier for you to remember. Okay, and once everything looks good, I can go ahead and click save and close. Okay, so where did my bank transfer actually go? Well, if you take a look at your checking account, so if I go to my check register, okay, I'm going to see this, that I just made a deposit, let me see, for January 28th. I don't know why these are not in order. There you go. January 28, 2022, you made a transfer funds from your checkings account to your savings account for that $100. So again, that's what you're trying to do. You're just simply just transferring money from one account to another, okay? There is another way to do it if you're trying to go from one account to another account. Again, and we won't learn that until chapter 14. Okay? So that's one thing that you can do in between banks. Now again, that is only if you use QuickBooks and set up your bank account through QuickBooks. Then you can easily transfer the money right here and there. But most cases, again, it is dangerous to link your checking account to this just because, again, then, you know, your QuickBooks is going to hold even more sensible data. You definitely don't want anybody to hack your QuickBooks account and be able to have all full access to your checking account. Okay, so if that's the case, then your checking account is separate, you don't use the QuickBooks for it, then you're going to have to do that transfer at the bank and then go back here and record that transfer afterwards, okay? Because remember, our books must match everything that we do. Okay? So that's one thing that we can do there. Now, the second thing is going to be what happens when we receive some bounced checks, okay? Now, if we receive some bounced checks, there are a few things that happen to our account and a few things that happen to the person who wrote the checks account, right? In this case, we call these NSF, non-sufficient funds, okay? And that's what happens when you write a check not knowing you don't have enough money in your bank account. And that's why when we talk about using QuickBooks, right? When we're in our checking account, since it's using the accrual base of accounting, right? It automatically calculated all the money that is current, even though we haven't actually initiate or sent out the check yet, right? It just automatically took it out of my checking account, even though I haven't printed it out and mailed out the check. That's because this is what accrual accounting does, is it calculates all the money for you, even though you haven't paid that person yet. Okay? And this is where you're going to be looking at making sure that you have enough money in your checking account before you just go ahead and count and cut that check. But for any instances where you know that you're checking up your bank statement, that's why you do your bank reconciliation to ensure that your money has left your checking account. If it hasn't done that, then yes, you could technically write another check, even though you know that you have a possibility of getting an NSF. Because what if you wrote that check and that very same day the check clears and then it end up overdrafting your bank account? Then that's where you get charged. And that's where this is the section here where what happens when we write those NSF checks. Let's talk about what happens when we receive one first, okay? And then we'll talk about what happens when we write them. So that's the idea here, is that means the bank is going to be charging us left and right? Especially for when you write something and you overdraft your bank account, right? I deal with Bank of America, and it's not the funnest thing ever, right? especially because not only do they charge a late fee on it or a NSF fee or an overdraft protection fee, they charge you based on every single day that your account is below zero. So that means you're racking up fee after fee on top of fee on top of fee. So it's very, very important that you do make sure that you do have enough money in your checking account and you prevent this from happening. Now, not only does it affect us, it also affects us when a customer also writes us an NSF fee. So let's take a look at this example here, right? Mr. Bob Mason once again is going to write us a check. Okay? So let's go ahead and locate his check right real quick. Now, in this case, what they tell you to do is they tell you to use the customer payments window, so receive payments, and they tell you to go ahead and click on that back button. Now, in this case, sometimes it works, sometimes it doesn't. So in this case, yes, Bob Mason was the last person who wrote us a check for a total of, for a total of the $1,177, okay? Now, for any reason you click on that back button and Bob Mason isn't the last person that you received a check from, then you're going to have to do your best to go through the information or go through the customer list, look up that person's check number because the bank is going to notify you this, okay? Now, there are a couple ways that you can set that up too, is that if you have mobile app, they can send you a text message to let you know that, hey, this has occurred. But for most cases, when someone does not, when we don't have those notifications, they're just going to take it off your account. They're going to charge your account without even letting you notify it, and you'll only find out by looking through your bank statement. Okay? So that's a huge thing that you should do, especially when things are affecting your checking account. You should either frequently check your checking account at all times, or you should be setting up some notifications so you do get flagged when something like this happens. So in this case right here, Mr. Bob Mason, he sent us a faulty check. So when he sent this check, he said that, oh, I thought I had enough money, but when we deposited in our checking account, it ended up bouncing because he didn't actually have enough money in his checking account. So what happens what do we do when this happens? Okay? This is what we have to do, right? We have to, once we get notified that a bank rejected this check because there's not enough money in Mr. Bob Mason's bank account, we get charged for putting in a check that didn't have enough money. And Bob gets charged too for writing off that bad check. Yes.
I'm curious. Wouldn't we, if we have deposited that check, wouldn't it already have that in this customer payment logs? I know it's not there this time because they're teaching us how to do the non-sufficient funds, but it would seem that would already be written off from the things that we did last time.
Well, okay, so every portable file that we use is specified for each chapter. So in this case,
Right.
yes, for this particular file, yes, this payment is already in here.
We're notified we've already got the payment listed on it.
Yes, yes. So in this case, we got notified saying, "Hey, this check has bounced." Okay? Now for every single chapter, sometimes you might not see the payment, sometimes you will see the payment. Okay? But for this case, right? The book tells me you've been notified that this guy sent you a faulty check. So not only did you get charged for this, right? Or you got penalized for it because you deposited a faulty check. Bob, on his end, also gets charged because he was the one who sent you that faulty check because he didn't have enough money in his bank account. So what do you do when you do get this notification? Well, this is what we do. There's only one place that you can do that, and this only appears on the customer payment window. You're not going to be able to find it on the menu bar. So if I go to customers, right, you're not going to have a record bounce check, okay? Right? Nothing there. No record bounce check there. It only appears on the customer payments window or the receive payments window, right? So in this case, right here at the top of the window, record bounce check. Now this is only if he sends you a check, that's when it will appear. Because if he sends you a check and nothing happens to it, or he hasn't paid it yet, then this will not appear. It will be grayed out. Okay? But let's say since we did receive the customer payment and we did acknowledge it, this is now at the top of the window says record bounce check. So when I click on that, this is what happens. Another window pops up. Says, okay, well, so in this case, what bank fee did you end up getting charged? In this case, we got charged, let's see. Okay, so top of the customer payment window, select the record payments. We got charged $10, right? And of course, when did we get charged? Obviously not today. We got charged on January 28, right? 28, let's see. January, I'm going to say January 31st. Okay, actually, no, it's February 8th. Okay, February 8th it is. Okay, February 8th, okay? And now it tells me, well, what account did you get charged? In this case, I got charged because he gave me a faulty check, and when I deposited, it's saying that I deliberately sent in a faulty check, so the bank charged me because they had to process it. So that's why they're charging me, because there was no money to transfer, right? There's a process behind the scenes that you have to pay for. Basically paying for the services for them to take from one bank account to another. So in this case, that's why they're charging you, because you sent in a faulty check, okay? And this class, well, let's see. Since Bob Mason belongs to the San Jose class, that means it's going to affect the San Jose class, okay? Now, here's what the question asks. Now, what would you want to charge Bob Mason for the inconvenience of a late fee, okay? Or an NSF fee. So in this case, right, because we got charged the money, why do we have to pay for it? That's not our fault. It was Bob's fault. Bob's the one who sent me the faulty check, and I got penalized for it. So that means I can go ahead and say, you know what, Bob? Since you sent me a faulty check, I'm going to charge you for that to cover the cost. And I'm going to also charge you on top of that money to, reprimand my whatever you want to say, right? Your losses, or because you put in the check for your convenience. I'm going to upcharge you on top of that too, because you wasted my time for me to go to the bank and deposited this check when you didn't have enough money in there. So that's where you can go ahead and make your decision on how much you want to charge. Now, obviously, you don't want to scare your customer away, but whatever you agree to, okay? So this has to be built in the contract before he decides to have an account with you, right? You have to have some terms and some policies, and this is going to be one of the key features is what happens when you have a late fee charge or some kind of charge. What is the amount that you're going to be subject to? Now, in this case, the bank was nice enough to charge me $10. I know today banks are not going to be very generous and charge you something as small as $10. They might charge you anywhere up to $35 to even $50 right now. Okay, so you want to make some kind of justification to charge your customer for that inconvenience, because you got penalized. Why do you need to pay for it? That was his fault. So in this case, right, the book tells you I'm going to do $20 because that's going to cover my bank fee that I got charged for, the $10, and I'm going to profit $10 out of it. So that right there is 100% profit that I just earned. Okay. Now again, you don't want to make your charge late fees super dramatic or super excessive, because then you'll scare your customer, okay? And they'll never want to do service with you again. Okay, so you want to make sure it's that this amount is generous. It's not unreasonable. Okay, so again, $20 should be reasonable enough. But if you're getting charged $50, then upcharge your customer at least $75, okay? That way you profit something out of it for the convenience of, depositing a faulty check on their behalf, okay? So in this case, this is reasonable enough. $20 is good enough, but again, it is up to you. You can create whatever amount that you want to put for this, okay? Just make sure it's reasonable. So again, I'm going to say, well, I'm going to charge Bob $20 because I got charged $10, and I'm going to make him pay that fee off, but also give me some profit as well. So I'm going to go ahead and click next. So what happens is now you're going to make sure that everything looks good, okay, that you're going to charge Bob Mason an additional $20. Once you go ahead and click finish, now Bob owes you an additional $20 to this. So here it shows that they undid the wait, why is this here? Okay, so here, there you go, right? Since that customer payment or this customer payment bounced back, it's saying that it went against it. So there now he owes me $1,197 opposed to his original $77. So he got charged that $20. And what we have to do is we have to send a letter with a new invoice saying, hey, because you sent me this, I'm going to charge you a $20 late fee or a $20 inconvenience charge, whatever you want to call it. Okay? Most people just say it's a late charge. Okay? So there you go. Now he owes me $1,197. Okay? Okay, you have changed. Yes. So save those changes. Okay. So that means when I did that, if I go to my checking account, it's going to show up on my checking account that it got taken out from my checking account right here. See, you got a general journal right here where it undid the accounts receivable, which is the invoice, and it basically deposited the money back, or it took out the money because we were supposed to receive it, right? It took the money back out from there and added back into the accounts receivable, so that now he owes me more money. Okay? And again, now my checking account has decreased. All right? So that's what happens there, especially when you have a bounced check, right? So then that means, let's say Bob receives our letter, or we go call him, right? And he goes, okay, here you go. I sent you another check. And it's going to include the fee that we charge. So in this case, I click on Bob Mason. Now, I don't know why this is here, but it's supposed to, he's going to be making a payment for $1197.72. Oh no, $1197.86. $1197.86, right? Because that's going to include these three bills, right? Plus the $20 late fee. And then, of course, he wrote check number. He wrote the check number. Check number 2538, and it's going to be on February 10, because we charged on February 8th, right? So February 10, he issues us a new check to pay off those three bills, okay? and we can go ahead and click save and close. Okay, so that's what you do, all right, and your customer is expected to pay for that late fee. Now, for any reason you can go around about this anyway, right? Maybe you contact the customer and they tell you, hey, go ahead and deposit it now, right? You still have to charge them that $20 late fee because you can't go call your bank and say, I'm sorry, I didn't know this person had an NSF check. They're not going to do anything about it. They're just still going to charge you because at the end of the day, they charged you for the processing fee. Okay? So you can't do anything about it because it already bounced. Now, if the customer decides to say, hey, go ahead and process it now, and because they probably ran to the bank and put more money in there, you process the second time around, maybe it does go through, but you still have to subject to charge him for that late fee because you won't be able to forgive him for that. Okay. Now, again, oftentimes, yes, you can forgive your customers for any reason if they're having some kind of financial, instability, like they're having some financial problems and issues and everything like that. You can waive the fee if possible, but just know that if you do that, you have to go ahead and go into that bounce check and undo it, or use one of the credit memos to pay it off. All right. Okay, so that's that there. Or any questions in regards to what happens when we deal with a customer giving us a bounced check? Okay, so then let's talk about what happens when you write the bounce check. Well, here are the 7 steps. I think there's 6 steps here. What happens when you write the faulty check? Well, whoever it is that you're contacting, so whatever, if it's your vendor or employee, whichever one, right? If you wrote them a faulty check, you're just gonna have to either apologize, and 2 things will happen, right? You either go to the bank, you put in money in the bank, and then tell the person that to redeposit the money, or you issue them a new check. The best way you should do, okay, is just issue them a new check. Okay, void the check that you had the NSF on, but you have to also agree that when you do end up giving an NSF check, you are subject to those late fees as well. Okay, so you have to make sure that you do know that. But again, when you were talking to your vendor, you could say, I'm sorry, I didn't know, I'm having financial issues, and they may waive the late fee for you. But in this case, right, best rule of thumb is don't deposit money and tell them to redeposit that check, because if they deposit it again and they get rebounced again, then that check is pretty much done for. You definitely don't want to keep charging your vendors any more money than it has, because they're just going to come back to you and keep charging you those late fees. So the best rule of thumb here is cut them a new check. Make sure you do your accounting. Check your bank statements to make sure which money has cleared and which money has not. Do whatever it is that you can do. Deposit the money in your bank, all right, so you have enough money for that check to clear. All right, that's number 1. And then just basically, instead of telling them to redeposit that check, just issue them a new one. Okay, you're better off issuing a new one so you have a good trail of transactions. Okay, so that's rule of thumb. There is you're better off sending a new check than it is to wait till you put the money in and then have them redeposit it. Okay. All right, any questions there? So let's talk about bank feeds. Now in this case, I am unable to show you how to access the bank feeds. It's because this is a fake checking account. National Bank does not exist. Okay? This is a fake scenario with a fake business account to demonstrate to you how to be able to look at a fake business and be able to process its income and its expenses. So in this case, they're not going to give you a real checking number. They give you a fake checking number just so then you're able to enter it in and be able to use QuickBooks for what it's used for, right? So Bank Feeds, what Bank Feeds does is it allows you to connect QuickBooks with any mobile banking online. All right? So that means if you get notifications online, it's going to automatically notify QuickBooks for you. So while you're doing your transactions, you get that pop-up message. You will know exactly what's going on at any given point in time. Now, not only can you be able to attach your bank card here, you can also attach your credit cards as well. So in this case, right, they'd say you could do these steps and stuff right here, but in this case, you really can't because you have a fake bank account. But I am going to show you at least the general area when you do set up your bank feeds. So, I mean, that's just the most you can do is just go to your edit preferences and click on banking. And you'll be able to see all those settings for the bank feeds. But for this, if you just look at your book, again, we'll give you a little overview on what you can do. So if you have the capabilities to attach QuickBooks with your actual online banking, right, you can do your online banking right here in QuickBooks. You don't need to go on the website on a separate web page and do it there. You could do everything directly into QuickBooks and it will do it for you automatically. So for example, you want to pay some vendors online. You can do that using the Bank Feeds app on QuickBooks, okay? And of course, like I mentioned, right, you're not limited to just your banking account. You can have your banking account, your multiple credit cards, and be able to do online banking that way too, right? You could charge your credit card, right? You can pay off your credit card, and that's what your options are here. It gives you options to allow you to be able to make payments and do bank transfers and things like that. So that's what's really cool about this is it allows you to be more, flexible in regards to making your online payments on time and virtually, basically, instead of doing everything manually on a separate web browser, right? You could do everything with the convenience of using one application. So again, you can have all of your online bank accounts if you want to, credit cards accounts, and just do all the transactions right here. So that's what's really cool about this. Again, unfortunately, I cannot be able to show you just because, once again, this is not a real bank account. So there's no way I'm able to show you how to do it. But if you go onto your icon bar, right, you have the options to look at your bank feeds. Okay, so bank feeds right here. So if you click on it, it's just going to take you to this window saying, hey, we need to be able to access your bank account online. All right, and you're able to get that through there too by going through banking as well. Okay. So it says you have not set up an account for online. So if you click yes, what you're going to basically do is that you're going to start from this right here. You basically look up your bank account and start going on forth. But again, we have fake bank accounts. There's no real way that we'd be able to do it unless we had a real bank account, which again, this is a fake business, so you won't be able to do it. Okay, so that's what happens when you get to that window. And you're able to do that too by going up to banking and be able to go to your bank feeds this way. Okay, so you just set up basically your online account so you have it attached to the file and so on and so forth, and be able to have access to all your online banking needs. So instead of using your mobile app on your phone, right, you have it all in convenience on your desktop at one time. So again, again, that's even more dangerous because not only do you have access to all your online credentials on QuickBooks, right? Now you understand why it's so important to lock up and make sure that your desktop at your work is secure. Okay? So again, that is bank feeds. Any questions there? Yes.
So we don't want to, as a business owner, we don't want to set the delivery date of the check way too far out because in a way it messes our bank statement.
Correct.
Say we have,
Correct. And we'll talk about that more so in chapter 14, but sometimes if let's say you've been using QuickBooks for quite some time, right? Sometimes you'll come across, they'll give you an error message saying, hey, you're entering something that's way too far back in the accounting period. Are you sure you want to make these changes? And again, if it's relevant, then do it. But in general rule of thumb, when we'll talk about accounting, is you want to make sure it is relative, meaning it's in the same time frame. You don't want to put in a transaction 5 years ago because how is that going to skew and make changes to your to all your accounts? It's going to affect it. It will impact it a lot, especially if you use your checking account.
yeah.
So you definitely don't want to do that. And that's why they usually say, so we'll talk about the accounting period more in accounting, that it can be broken up into sections or segments, right? You could do it quarterly, you could do it annually, but the fine line is you should, at the end, make sure it's a 12 consecutive months, because what happens at the end of your accounting period?
We close the book.
You close the book, and what's also important? What's important for the IRS?
We have to file the tax.
You have to file for taxes at the end of the year. So at that point in given time, right, you only have 12 months to fill up your entire books with one whole year's worth of transactions, right? And then you would have to appropriately close them and start a new book for the next accounting period. But we'll talk more about that in chapter 14. But yes, that's the dangers about that too, is you shouldn't be putting in transactions that happened 5 years ago because that defeats the purpose of relevancy. You want to make sure, because a dollar 5 years ago is definitely not a dollar, 5 years fast forward, right? It's definitely changed. Okay. All right. Any other questions? Okay, so that whole section is all about online banking and just making it convenient for you to attach it to it. Okay, so we'll move and skip along forward. Okay. So the next section we're going to be talking about is going to be now the bank reconciliation. Okay, how do we reconcile our bank accounts? Now here's what's cool about QuickBooks is you're not limited to just reconciling the bank, right? You can reconcile any account that has a register. So if you remember back in chapter 1 and chapter 12, your accounts that have registers are going to be your assets, your liabilities, and your equity. So all three of those have registers. They all have account balances, right? So if we go ahead and take a look at my chart of accounts, okay? If we go ahead and take a look at my chart of accounts, you're going to notice that every single asset, every single liability, and every single equity account is all going to have some kind of account balance right here, okay? And notice that your income and your expenses don't have any, right? Now, because these all have registers, that means you're able to match them with your proof of a transaction, right? Now, the reason why they say bank reconciliation is more common because in order for you to match your books, you need to have someone else's copy of those transactions for you to be able to match it. So a great example is going to be your bank statement. The second one is going to be your credit card statement. Why? Because those are other companies who tell you this is your track record of your transactions. And what you're going to do is you're going to compare and contrast your books to their statements. Okay? Because that tells you this is what you've done, this is what actually happened. Okay? So, with that being said, that's why for other cases, when we look at other assets, such as, my inventory, right? How do I check that? Well, I would have to check that through my sales, right? Go through my sales receipt. How many items did I sell? Okay? Other things such as your, your accounts payable. How do I check that? Well, I can do that by going to my vendors list. What did I buy? What did I charge on an account? That's how I'll be able to match those up, by matching up all my bills that I received from other companies and making sure that my accounts payable matches the amount that I owe. So there are many ways that you can do that, but the more common ones and the easier ones is that you're going to have a bank statement, right? Because that one is always done at the end of a given month, right? You're always going to get monthly bank statements, right? Same thing with credit cards. You're always going to get a monthly credit card statement. So that's why, for example, the accounts payable, it's a little harder because you're going to have to make sure that you keep a track record of all the bills that you received, and you're going to have to be taking all of them, and they're all going to have different due dates. So at least for this one, right, a bank account and a credit card account, they all give you some end date at the end of the month, at the end of the month, at the end of the month. Yes.
Okay, so I understand bank account, credit card account, they do a monthly thing. How often is it suggested you match and reconcile those other asset and liability accounts?
Honestly, if you can do it, you choose, because again, that's another task on your plate. Okay, depending on what position you are. If you're the general accountant, that's just more work for you. Okay?
Okay, so there's nothing in GAP that or anything that are in the general regulations that suggest have to do it annually or anything else.
They do recommend you to at least go through your books towards the end, because again, you gotta prepare your files for taxes, right? So you're gonna have to do it at the end of the year anyway.
Okay, all right, thank you.
Mm-hmm. Where a bank reconciliation, what they do is they recommend you to do it at the end of every month, because you get statements every month, right? You need to keep a really close track record to your bank account, because that is the most important account that you have in all of your accounts, is your checking account. Where is your money going? You need to keep a really close track record of where you're spending your money, and when you receive your sales, you're dumping that money back into your checking account. So your checking account is going to be the one that's mostly used, because you're always going to have transfers, deposits, written checks, right? EFTs. You're also going to be charging fees left and right. There's so many things that you do with your checking account, and that's why it's one of the most important accounts that you reconcile most frequently, and you should do it at every month. They do recommend that, just because you get a statement at the end of the month. So, is it necessarily for you to do it at the end of every month? If you don't have that many transactions, then yeah, you can skip a month every once in a while. Just making sure that you do a good job keeping a track record of it. But in this case, you get monthly statements, so you should do it at the end of every month. So this is what you should be getting when you receive your statement. Usually it happens at the end of every month. Okay, so in this case, this is the bank statement from this business checking account. It doesn't really tell me what company this is, but it tells me in the summary. It says that I started out with the bank account as of December 31st of 2020 that I started out with $14,334.50. Okay, and now that it's the end of January, this is what my bank account reflects. Okay, it reflects that I have $5,424.92. Okay, that's how much my bank has. Now let's actually take a look at our records. What do I have in my checking account? Right now, I'm currently at $1,554. I am so off in regards to my bank account. My bank account says I still have $4,000 extra. So what can I do to make sure that I go and double check my transactions and compare it to my bank statement? I'm going to do a reconciliation. Okay? So usually this happens towards the end of the accounting period. Okay? You can treat this as an adjustment entry, but we don't talk about that till chapter 14. What is an adjustment entry? What are the standard procedures that you need to do to close up your accounting period? This would be one of those transactions. It's going to be looking at your bank reconciliation and figuring it out, because you don't get charged in the middle of your accounting cycle. If your accounting cycle is every month, right? You don't get a random bank fee charge in the middle of January, right? It happens towards the end of the month. So again, that's where it becomes an adjustment entry. So how do I do a reconciliation? Well, you have right here on the home page, or you can go up to your banking at the top of the window and be able to reconcile that way, okay? Reconcile. So if I go ahead and click on my reconcile window, right, I get this pop-up window saying what account am I doing? Okay, so in this case, I'm doing my checking account. If you click on this drop-down menu, you're able to do any account. Well, once again, hard evidence, proof of transaction has happened is going to be your bank statement. So in this case, I'm doing my checking account. What day am I doing this this bank reconciliation? So in this case, you're going to match it to your statement. So this one tells me that I need to match it to say for January 31st of 2021. So in this case, I need to change this to 21. Okay? And of course, I typed it in, but I have to use my calendar to secure that date. So again, January 31st of 2021. Now, this is rule of thumb. You need to make sure that this number here matches the statement, matches your bank statement, because what you begin with is very crucial. Okay? I began my last bank reconciliation told me I had a total of $14,384.50, which we know matches our bank account from December 31st of 2020. Okay? So that means we're good to go and squared there. Now, for any reason that number does not match, that means you already have a discrepancy from your previous bank reconciliation. So this number is always going to populate for you automatically, because every time you go through a bank reconciliation, that's the amount that you're going to start with at the beginning of every bank reconciliation, or every month that you start off with, you're going to start off with that amount. So it's very crucial that this number does match, okay? And your goal is you need your checking account to match you on the bank for $5,424.92. So where do I put that number? You're going to put that number right here in the ending balance. So $54.24.92. Okay? That needs to match your checking account with the bank statement. Okay? What other statement charges or any interest that you've earned? So, for example, statement charges, right? For using a business bank account, you're gonna 100% incur service fees, okay? So let's take a look on my bank statement. What did the bank charge me? So in this case, right, let's take a look. Service charges, they charged me, right, $10 Okay, due to that that NSF check fee, they charged me there. Okay. So I can go ahead and put that in there in my records that I got charged $10, right? And when did they charge me? They charged me on the statement dates, which is the 31st of 2021. Okay. And I'm going to go ahead and click. Okay. What account is it going to be related to? Since they charged me, it's a bank service fee. Okay. And what class does it belong to? So again, your bank account is going to affect both San Jose and Walnut Creek. So in this case, we have an account called overhead, which basically applies to both the stores. Okay. Next is going to be, did you collect any interest? So for those accounts, for example, if you allow people to pay you via online or via payment plans, you can charge your customers interest. So that means that is interest that you're earning on top of what you already charged them and what they owe you. So in this case, right, most cases, a lot of stores, they charge you anywhere from 24 to even 30% interest, right? But that's an annual rate. So you divide that by 12, and that's how much interest that you're collecting off of your account balance. So in this case, just like what we did in chapter 3, when we financed, we charged our customers based on a 5% or 5% charge interest fee, okay, on outstanding overdue balances. So in this case, let's take a look in our bank statement. How much money did we actually earn from these payments? So in this case, our interest that we've collected was $8.62. So $8.62. And we got charged this on the 2021. Okay. Once again, this time this is going to be interest income because we earned the money on top of what our customers owe us. And once again, this is a overhead. Affects the overhead. Okay. So once I've done that, I can go ahead and click continue. Okay. And once I get to this page, this is where I'm going to be matching my books to the actual statement. Okay. This is the general area. This is what I want to do. I take a look at all of the transactions that happened. So right now we're currently in February. I don't need to see February. I only need to see every transaction that happened between December all the way to January, okay? So I can do that by hiding all the transactions after the statement date. My statement date is January 31st. So that means any transaction that happened in February, I will hide it. So for example, as you can see, we have a couple transactions here from Bob Mason in February. I can choose to hide those. Okay? So then these are the transactions that happened between December 31st all the way to January 31st. Okay? So now what do? My goal is, as you can see here, it tells me right here that I began my bank account with $14,000 and I have 00 this. Your goal is you're trying to get this. So right now you took out the service fee, you added the interest income. So now your ending balance needs to be $5,424.92. This is what you began with. So right now you need to figure out how you spent $8,000. Okay? So I'm going to take my bank statement and I'm going to compare. So right here's all your checks that you wrote. Over here's all the deposits that you've made. Okay? So let's see what I did. Okay? So this is how you're going to compare your transactions. You're going to start off with all the checks that have cleared. Okay? So, for example, checks that have been paid out is going to be check number 325, 326, 327, 6001, 6003, 6004. Right here, I'm missing 6002. But that's okay. Maybe we might not need it. Okay? So here you go. So that's the best way to do it is go by check number first and then go by the amount afterwards. Okay? So in this case, these are the checks that have cleared. A total of 6 checks have cleared. So what do I have to do here is I'm going to check mark one at a time to see which one have cleared. So we said 25 cleared, 20, oh, not that one. 26 has cleared, 27 has cleared, 6001, 6003, and 6004 have cleared. So in this case, right, that's how many total have cleared, and this is all that has not cleared. Okay? Because again, especially same thing, right? If we wrote a check out, the person who's receiving on their end, they choose when they want to deposit it, and when they deposit, that's where it takes out of your checking account, and that can also take anywhere from 2 to 3 business days, 2 to 5 business days. Okay? So those are the checks I have cleared. Now notice this, right? Here you go. It says that I cleared a total of $4,335 worth of checks. But in this case, right, it shows that I'm still outstanding, or I'm still need to keep minusing 4,622. I still need to keep going. Okay? So, next thing we're going to do is we're going to take a look at all the deposits that we've made. Okay? So, let's take a look. Okay? So the very top of the window, here's my deposits. So I made a total of 3 deposits, okay, in the amount of $249, $1,950, and $1,177. Okay? So let's take a look. Okay? We have, let me see, the 1950. We have the 249. And look, we have the 1177. Okay? So now let's take a look. Okay? Now that I cleared that, I am now missing $8,000. Okay, so I'm missing $8,000. Now let's take a look. I have one more right here for $8,000. But I need to verify that that's on my bank statement before I can clear that out. So let's see. Okay, what other things I missed on my bank statement? I already went through the deposits. Okay, I went through the checks. I went through the interest, and I went through the fees. Aha! I have an owner's withdrawal for $8,000. So bingo! I found my transaction, which is I withdrew $8,000 from my checking account. Owner's withdrawal. So in this case, here's the $8,000. It says nothing here because it's an owner's withdrawal, but we confirmed it happened. So then now my balance is 0. That means with all these calculations that I check marked, those are the ones that cleared. So that means I am missing, the one that hasn't cleared yet is this $2,000 check that I wrote, as well as this other $57 check I wrote. Okay, so if you calculate that, right, there's your missing $4,000, plus don't forget the transactions that you had in February. Those were also additional transactions that you could add to as well. So right now, after doing the bank reconciliation, your end goal is this discrepancy must be 0. So in this case, I matched my books with my bank statement. Okay? And that means I did my bank reconciliation successfully. So that means when I start the next month, February 1st, I'm going to start out with $5,424.92. Okay? Now, for any reason, this number just ends up not matching, and for some reason you didn't have a transaction there, what you can do is you can go and modify this. right? You get that same window. And what you're going to do is you're going to go ahead and locate the discrepancy. So once I click that, there are 2 or 3 options. So right now, I know for a fact I'm missing check number 6002. I can run one of these 2 things. I can run a discrepancy report, or I can actually run a previous report on the last bank reconciliation. So those are things that you can do to find out why your books are not matching. And if you choose to proceed with that missing amount, you need to find some kind of way to adjust it. Because at the end of the day, that means you're missing money in your checking account, and you need to figure out, you need to investigate that, or else if you submit this to the IRS, they're going to assume that someone stole or there's fraudulent charges going on in your business, and you don't want that. So you need to make sure that if that's the case, you need to find that discrepancy until you find it. Where did you do? Did you miss a transaction? Did you forget to add a check-in? Did you forget to deposit a check, or did you forget to write a check out? For any reasons, you need to find out what that discrepancy is. Okay. So I'm going to click cancel. So here I'm at this bank reconciliation. Everything looks good because I'm at 0. I can go ahead and record and reconcile now. Okay. So once you've done that, then you're going to get this box right here where it says, what would you like to run? Would you like to run a summary, a detailed report? But in this case, I selected both, and I go ahead and click display, and it's going to give me the report on my bank reconciliation. Okay, so this is what happened here, right? That's the summary. This is the detailed report saying, okay, these are the checks that have cleared. These are the deposits I've made. This is the withdrawal that I took out, and the interest that I collected, and so on and so forth. Okay. Once this is all done, then I can say I am done. Okay. So what happens to that? Well, once I've done that discrepancy, right, on my checking account, I should see an entry in here that states that I had a bank fee, okay, as well as a deposit for interest income. Okay, so in this case, what was it, January 31st of 2021. There you go, January 31st of 2021. Here's the bank service fee for the $10, and then here's the interest income that I earned. Okay, so again, it automatically puts those transactions in there, and even though my bank account doesn't reflect it, okay, that's okay, because don't forget, you've also written all these checks here, right? These are the checks that haven't cleared yet. Okay, so then the next time I receive my February statement, right, and I do another reconciliation, boom. Now it tells me I should start my bank account with $5,424.92. Okay, all right. Now here's a little fun fact. Pro can only do one bank reconciliation at one time. Meaning, if I process this, I cannot go back if I do the next month. Premier, Enterprise, and Accountant, you're able to go as far back as you like. Okay? Now, usually, like I said, a bank reconciliation usually happens at the end of every month. So, yeah. Now, if you click undo, and let's say this doesn't match your bank statement, then you have to find out why. Okay? So you can undo the bank reconciliation. Just note that if you do this, right, it will not undo the bank service charges, the interest income, and so on and so forth. Okay? It will only just undo the reconciliation, nothing else. Okay, so you have to be very, very careful and make sure, are you sure you want to undo this reconciliation? Okay? Any questions? No questions? No questions. Okay. All right. Yes. Yes.
So we found out that there was owners, that owner took $8,000,
Hmm.
and then there's no notes to it, and then we didn't add any note to it. But isn't that better? We add the note to it.
Oh, absolutely. Yes. You want to be very specific, especially in this case. The bank has recognized that the owner took the money, right? It even says right here, owner's withdrawal. So, or sorry, it says other withdrawals.
Yes.
Now, for any reason that you don't put any notes in it,
Yeah.
that seems like a fraudulent charge, right? Someone just stole money. That for yes, so you should be very specific, especially if you do an owner's withdrawal.
Yeah.
Best rule of thumb is write a check because that's proof of a transaction, and no one's just going to the bank and just taking money out. So your safest bet is if you're having an owner's withdrawal, write them a check. Okay.
Well, in check, it tells to whom it's going to.
Correct.
Right?
Correct.
No. Okay.
Correct. Right? And an owner cannot pay himself as an employee. So you also have to keep in mind because he owns the business.
Yeah.
So that means that money is his. So he has every right to take the money. However, for business purposes only, right, when we take a look into understanding the business versus economic entity assumption, you need to keep your business and your personal checking accounts separate. That means the owner can't just buy whatever he wants with the business checking account
Yeah.
because that's illegal, especially if he's writing it off.
Yeah.
So there is a process that you have to do, and one of these things is yes, there may be no note to it, but there should be a note to it.
So, it, will it make a difference if we add the note after we reconcile it?
I mean, you can add notes whenever you'd like.
Okay.
So it's not wrong, or it's not going to affect it because you're just adding notes to it. So again, we'll talk about this in chapter 14 as well. You can edit any transaction at any given time. If you're changing a value, you want to be careful with that. But if you're just adding a note, you can do that whenever you like.
Okay.
Mhm.
Thank you.
All right. All right, so that's that there. That's a bank reconciliation for you. Okay? I'm also going to show you today what it's like to do a credit card reconciliation, right? Because in this case, we can reconcile almost anything that is an asset, liability, and an equity account, right? So in this case, a perfect transaction that we would most so commonly see is a credit card reconciliation. Now, I'm going to show you the steps are identical. Only difference is what is the end result after you submit this, okay? So here is a copy of our credit card. I know it's, sorry, wrong one. Here is a copy of our credit card. Where is it? Sorry, I'm gonna have to keep scrolling. Scroll too far. Let me see. Reconciliate credit cards right here. Here is a copy of the credit card statement. Okay? Now I know this is very, very tiny. In your book, it might not be too visible, but just follow along with me. Okay? It's a little bit visible, but let's go ahead and reconcile our credit card. Okay? So as I mentioned before, it is identical. The process and everything is the same. The only difference is what happens when you submit your reconciliation, okay? So let's go ahead and reconcile my credit card. So if it's identical, that means I can choose to go on my home page or go to banking to reconcile. Now, as I mentioned before, right, all I have to do is take this drop down menu and select what I want. So in this case, I want to reconcile my National Bank Visa Gold credit card because that's what this credit card statement was. It's for that. Now, what date is it? Okay, so in this case, you could see that we didn't do it for a while. So in this case, I'm doing it for February 2021. Okay, end of the month. Right now, it should say that I should have started my balance with $2,152, and I need to record my ending balance. So let's take a look at my credit card statement. So here it is, right? I started out with a 2,152, so that's correct, right? My previous balance, that's where it is. I have interest. I'm sorry, new changes. So I bought something totaling up $168.70. I had some finance charges, so interest was $16.11. So now, right, my total amount here is $184.81, right? And I made a payment. So here, pretty much straightforward, right? So we got charged some interest, we made some payments, and we also made some future charges. So in this case, that's what we're going to use to start off. But at the end of the day, our previous balance is stated right here that we started out with $2,152, which is correct, right? Now, what's my ending balance? My ending balance or new balance is $184.81. So that's the number I'm going to punch into here. 184 184.81. Okay? And then, of course, the difference between this and a credit card is you're going to have interest that you're going to be charged. So in this case, you were charged $16.11. And when was this made? At the end of the month of February 28, 2021. Okay? And what account is this going to be associated with? Interest expense, right? Because you had to pay this for owning a credit card. You have to be responsible to pay for the expenses. So in this case, interest expense is going to be your account. So once everything looks good, right? Again, class is overhead because if this business credit card affects both companies, okay, or both stores. So once that looks good, I can go ahead and click continue. Same exact thing. I'm going to go look at all the credit card charges I made and all the payments I've also made. Okay? And here it already calculated that I got charged interest. Okay? So right now I'm in a discrepancy of $19.83. So let's see what was my first thing I did. I made a payment for 2,100 or actually we could go up here, right? The first thing you made was a payment. You made a payment for the $2,152. Okay? So here you go, payments, $2,152. Okay? Then let's see what else happened. I had two charges on my credit card. I bought something right here for office supplies, and then I also spent money on rentals. So in this case, I charged $133 and $35. So let's take a look. Okay, I charged right here $133, and I also charged $35. So then let's take a look. My discrepancy or my difference is 0. So straightforward, everything's identical. The only difference is, let's see what happens when I click reconcile now. I get a completely different window. I get the option to either pay the credit card right now, or I can choose to enter in the bill for a future payment later. Now, this will depend, right? Did you receive your statement? If you received your statement, does it tell you your due date? If it does, we'll make the decision. Are you going to choose to pay now or are you going to choose to pay later? Now, in most cases, right, you're probably going to choose to pay later. All right, and I'm going to click OK. So if I'm going to enter in the bill, so here it is. It filled in all the information for me. Now, here is I'm going to close that. So you get the same window for the detailed report. Here is what you have to do. Now, with a credit card payment, right, you have the option to choose to pay the minimum, pay above the minimum, or pay the whole credit card off, right? So in this case, when you are entering the bill, you need to be sure how much you're going to pay. Because if you are not sure how much you're going to pay, then you should wait till you make a payment and then just pay the credit card off. Okay? So that's the option, and recommended is that if you don't know how much you're going to pay towards your credit card, wait to enter that in the day that you make a payment for. Don't enter in the bill. Okay? But let's say I do know how much I'm going to pay. In fact, I'm going to pay the whole credit card off. Then that's where you're going to say right here that you're going to pay it off for $184.81. But let's say, no, I'm going to choose to pay just the minimum. Then that's all you're going to pay. You're only going to pay $50 to your credit card. So that's why it's so important that you do understand this, because if you take a look at your account right here, right, you're actually making a payment to the credit card. Okay? Well, in this case, you're entering a bill. Now, here's a rule of thumb as well, too. Yes, you can, if you decide to change your mind and pay more, then yes, you can go in and edit your transaction and pay more. But this is the purpose of that is if you're not sure, don't enter in the bill. Because if you don't know you're going to pay the minimum or you're going to pay all of it, then choose to wait till you make the date to pay and write a check. That way you don't have to enter in a bill and do a bill payment. Okay? Because what you're doing here is you're transferring whatever amount is in your credit card right now, and you're transferring that amount into the accounts payable account. Okay? Not the other way around. You're not leaving in the amount in the credit card or so on and so forth. So that's the rule of thumb here, is we need to ensure that when we decide to pay either the bill or to enter in the bill, how much are you going to make a payment for? Now in this case, I'm going to say I'm just going to make a payment for the full amount of $184.81. Okay? Just to make it easier. So then that means when I receive it, I have exactly 30 days to make a payment. Okay? So that means I'm going to make a payment to my credit card for the full amount. And I'm going to click Save and Close. Okay? And of course, you choose the bill payment to pay it right there. Now, if you chose Rhoda-Checks, your Rhoda-Checks window is going to pop up. It's not going to insert a bill or anything like that. But you are going to make a payment to the credit card. Okay? So for any reason, let's say you chose not to, right? And you're waiting till future, right, to pay it off. Pretty straightforward. You just use your Rhoda-Checks like a regular window. The only difference is you are going to come out of your checking account and you're going to make a payment to National Bank, which is the place, right? You'll get a pop-up window saying, hey, are you trying to make this? I'm going to go ahead and click, let me see, go to pay bills. I'm just going to, click write your check. So what you're going to do is on your account, you're actually going to list out that credit card right here. Okay? And then you make your payment forever how much that you're going to make a payment on the date that you're going to choose. So that's your second option. If you choose that you're not quite sure on how much you're going to pay, wait till the day that you pay off your credit card and just simply write a check. Okay? Okay? Any questions there in regards to that right there? No? No questions. Okay. No questions? Then let's go ahead and quickly go over the multiple choice questions here real quick, and then we'll take a nice break and then continue on with chapter 6. Okay? So let's take a look at the multiple choice section here. Okay? Your job is to select the best answers for each of the following. Okay? So number 1, okay? When the beginning balance field on the begin reconciliation window doesn't match, okay, the beginning balance on the bank statement, you should letter C is correct. Okay, you're going to click on the locate discrepancy in the begin reconciliation window, so on and so forth, run your discrepancy reports, and so on and so forth. Locate it. Now, in this case, right, sometimes the longest answer is usually the correct answer. Okay. But if you actually take a look at it, it's pretty descriptive. You can kind of imagine all the steps that are necessary to find that discrepancy. So again, it's also by reading the answers, you could kind of tell which one is more correct. So good, C is correct. Number 2, which statement is false?
D.
Let's take a look at D. You can enter a bank service charge using the write-a-checks before you start your reconciliation. That is true. You can do that before starting your reconciliation. It's one of the steps, if you read the book, it's one of the steps that you can do. It's optional because at the end of the day, those are statement charges. It's automatically charged on your bank account. Your bank is not going to tell you, hey, guess what? I charged you for a service charge. No, unless you have notifications turned on, okay, or you check your banking account all the time, then you'll figure it out. But they're not going to tell you. They're just going to charge and take it off your checking account automatically without letting you know. So that's something that you have to be aware of, is that they're not going to tell you unless you put notifications on, okay, and put some alerts on if you see any difference to your account balances. But that is something that you're going to have to be responsible for and check that on your actual statement. So D is not the correct answer. Okay, because we're looking for the false statement here.
Then we don't write straight to the register transaction.
Let's see. Which one?
Not
Letter C? No.
letters.
Okay, letter C says you can enter in the bank service charges using the register transaction. Yes, you can, right? So instead of using the write-a-checks window, right? You want to just put it right directly into the register? Yes, you can. All you have to...
I don't remember seeing enter statement charges on anything when you were doing it. Is that a false thing that, sometimes they throw in a name that's not really a name.
Good. That's correct. Letter A. What is statement charges for?
They have bank service fees, but I didn't know that they had statement charges.
We do have statement charges, but who is it for?
For our customers?
Yes, it's for you to charge your customers for statement charges. Has nothing to do with your bank account. So in this case, it's you do need to know terminology. Okay? So this one is saying, oh, you enter the statement charges through your enter statement charges icon on the home page. No, that's strictly for your customers. That has nothing to do with the bank. Okay? So in this case, the correct answer is letter A. This statement is false. Okay? Number 3, when you find an erroneous amount on a transaction, okay, while reconciling, okay, correct the entry by
D.
correct, performing either B or C, okay? In this case, right, you would either do you by double clicking on the actual entry and then making changes to it, right? Again, you can edit a transaction at any given time, okay? Letter C says by selecting the entry in the reconciliation window and then clicking go to and change the error on there. Yes, you can actually do that. So I don't know if you actually noticed it, but at the bottom of your reconciliation, you had that go to window. Okay? So yes, you could double click on it and fix the entry there instead of, because you're in the middle of your reconciliation, you don't want to cancel it and then go to that window. Okay? But the great thing of having multiple windows on at the same time is you'll also be able to be on your bank reconciliation, but also open up another transaction in another window and fix it that way. Okay? But you want to be careful when you do that, just because it can, since that transaction affects your bank reconciliation, it can cause you to close out your bank reconciliation when you do that. But yes, either B or C. Okay. All right, number 4. Okay. To properly record a voided check from a closed accounting period.
C.
Letter C is correct, right? You're going to find the check in the register and select, and then you're going to edit it, and then, of course, you're going to choose to void. So, again, especially when you have in a closed accounting a period, unfortunately, we'll talk more about that in chapter 14, which is all about adjustments. If you are in the closing accounting period, you should not even have access to this. Only the admin's going to have access to this, and they can be the only ones that to make changes to it. Okay? So, and it's simple. All they had to do is just locate that where that entry is and just simply fix it. But again, if it's already closed out and let's say you can't fix it, you do have to create an adjustment entry, which again, we will talk about that in chapter 14. Number 5, okay? Which of the following columns, okay, cannot be displayed in the checks and payments section of the reconciliation window?
B.
B, as in class. Yes, you only see check number, the date that you wrote it, and who you made a payment to. There's no class in there. Excellent. Number 6. You know you have a reconciliation. Wait, let's do it again. You know you have reconciled your bank account correctly when?
B.
B, when the difference field shows a $0 balance. Excellent. Number 7, okay? The reconciliation summary report shows
D.
D, both A and C, correct, right? It shows the beginning balance that shows on the bank statement, and of course, it also shows the ending balance that is shown in your register in QuickBooks. Yes. Okay. It doesn't show B, which is the detail on all of the entries, right? That is going to be the detailed report, not the summary. Okay. Number 8, okay? What accounts should be reconciled?
A.
A, any account that is a receivable or that receives regular statements. Yes. Okay, that's usually your best friend, your best bet to be able to compare yourself to someone else's books, right? That's important. If you don't have proof that someone else is keeping track of your transactions, then there's really no point to reconcile. Right? Number 9, okay? When you undo a bank reconciliation, which statement is true?
D.
D, number 9, is correct, right? The undoing a bank reconciliation does not delete the bank service charges. Okay, again, it will stay in your check register, right? So that when you redo your bank reconciliation, it is definitely something that you have to check off on the list instead of enter it in, because you already entered it already. Okay? Number 10. When a customer bounces a check, you should.
Don't you start with D and then do C?
Let's see. You're gonna click on the record bounce check button at the receive payments window, and then let me see. C. You're gonna create an invoice to the customer for the NSF checks. Now, in this case, you don't do it yourself. It already creates it for you automatically. What you should do is notify your customer and print out that invoice and send it to them.
I didn't think about it being the invoice would have already gone in, but you do have to send it.
Yeah, you have to send it in, right? It will create it for you, but how are you going to let your customer know? You would have to print out that invoice and mail it out to that customer, or whatever you do with it. If it's online, then you email that customer. But at the end of the day, C, you don't create it yourself. It automatically creates when you issue this record bounce check. So letter D is correct. Okay. Number 11. When you finish reconciling a credit card account, you
B.
you can create a check for an amount equal to or less than the total amount due. Yes. Yes, you can.
Yeah, I kept reading the C and D is can choose, and I thought, no, that's not right.
Cannot choose. Well, in this cannot
I just
choose.
over it.
Well, in this case, you can't bypass it. That's for sure. You have only 2 choices. You either write a check, or you can choose to enter in a bill. Now, of course, you're not always. You can always bypass that, right? Just exit the window and then don't pay it until later, right? So
Right.
you can only bypass it after you select the choice.
I'm just finding in doing this, I need to read and reread because my brain skips over stuff in the words. So,
All right. Number 12. What is the accounting behind the scenes for a bill coded to a credit card liability account? So this is an accounting question.
C.
Letter C for number 12 is correct, right? You're going to end up increasing a credit, which is the accounts payable, and then you're going to decrease the debit, which is the credit card transaction. So yes, if you remember what I told you, right? When you enter in a bill for a credit card, what you're essentially doing is you're taking the amount that's in the credit card and you're transferring it to the accounts payable. Okay? That's the purpose of what a bill does. So letter C is correct. Number 13. In what account is a transaction created if you complete a reconciliation and your difference is not 0? So what can you do?
C.
Number 13, letter C is correct. You can reconcile the reconciliation discrepancies Yes, that's what you can do. You could do that many ways, right? The letter C is correct. Okay, you're not going to be using the opening balance equity. No, equity has nothing to do with your checking account. You're not going to uncategorize income. That makes no sense. And of course, you're not going to have an other expense, right? It's all going to be, in this case, this one's an obvious one. All right, number 14. Yes, you have a question? Okay, number 14. When you void a check written in a closed accounting period, QuickBooks gives you an option to create what?
D.
D.
Letter D is a journal entry in the closed accounting period. So yes, you would be creating an adjustment entry. Once again, that we won't learn what a journal entry or an adjustment entry does until chapter 14. But because the bank reconciliation is usually done during the closing period of the accounting cycle, it is considered an adjustment entry. What was that? I cannot hear a single thing you just said. You're cutting in and out. I'm sorry. Can anybody else hear her?
No, it's too muted.
No.
Can you put it
Can-
in the chat?
Either that or Wahhabi, I'll talk to you after class, okay? Number 15, okay, you are notified that you have bounced a check, okay? What should you do?
A.
Letter A, either you're going to contact the vendor and apologize, and of course, you're going to arrange a payment, such as either sending a new check or having them redeposit the check. Okay, good. All right, excellent. So, we're going to stop here. Okay, it is exactly